What if I told you that the banks already know where your stop losses is hiding? That's why price always stop you out before flying to your direction. In this video, I'll break down exactly what liquidity is, show you what really drives price, how smart money tricks traders, then walk you through a live chart showing you the perfect inducement entry. Liquidity is not what you think it is. I'm Victor Snow from Trading from the Soul, where ICT is simplified. Like and subscribe so you don't miss out on future videos. Liquidity is simply where traders' money is sitting at in the market. These are what your liquidity zones look like in the market, which are actually the value structure low, value structure high, and our fair value gap. And we say whenever our CRT forms at our structural draw on liquidity, we'll move to the next structural draw on liquidity. Can you see this is our CRT model 2 here? You can watch the one stupid CRT plus structure trick that all losers to masters after this video to help you understand this more. We'll move to our next structural draw on liquidity, which is our fair value gap. So before we can trade to the upside here, we are expecting something like this. This is our one stupid candle, and this is the candle range low, and this is the candle range high of it. Can you see we are having our total sweep right here? We can make our entry, stop loss, and we target this next structural draw on liquidity traders. For those wondering what structural draw on liquidity is, there are 3 liquidity levels that attract price to themselves. I'll talk more about this as we proceed. So let's see how the trade unfolds. Okay, and we fell. Why was this level unable to attract price to itself even though it is our next structural draw on liquidity? Because here already mitigates our stronger draw on liquidity. Remember how we get our value structure low and value structure high in the market? This is our break of market structure, previous high, previous low. You see we had our read right here, came to have a break of market structure right here. This is our value structure high, and this is our value structure low, and this is our fair value gap traders. So rather than buying from when our CRT was formed here, we can wait for a market structure shift. Why? Because this value structure low right here is stronger than this value structure high right here. Just like in case of strong and weak magnets, this is a stronger magnet right here. And can you see how market came back to this value structure low right here? So I want you to visualize this as travelers traveling. Along the way, there are post stops. People do stop there, but just for a short period of time. The airport is the main place pulling people to itself. So even though the travelers stop at the bus stop, their ultimate destination is what? Is usually the airport, because it is far more of great importance. Same with liquidity pulling price to itself. Don't miss this. So this is our break of market structure, right? This is our previous high, this is our previous low, this is our CRT forming at our fair value gap, this is our one stupid candle, and this is our candle range high. Our second candle swept it. We should sell, right? But we cannot, because this is an invalid structure right here. Why? There is this thing that traders do. If you do this, I want you to give me a thumbs up as I explain this. Is hiding their stop loss level at previous highs in the market. People that sold here after their CRT was formed here move their stop loss from here to here in the market. Same with people that sold here, they move their stop losses from here to this level in the market. Together with people that sold from this level in the market, they all move their stop loss to here. In fact, thousands of traders that sold from the back, they all have been moving their stop losses in what this sequence that you're seeing right here, or down to what here, sitting above this high in the market. Liquidity is where money is sitting at in the market. The whole money in the market is resting above these highs. So the smart money see this high here as a stronger magnet that will attract price to itself. This is mind blowing. This is where price moves. So price moves from the highest level of liquidity to the next level of liquidity. So currently here, this previous low is the low level of money in the market. So rather than selling from this level, even though we are in line with our trend, we'll wait for what we call an inversion fair value gap, which is when price closes above this fair value gap. We'll wait for price action to return back to our fair value gap, and give us our CRT model. This is our one stupid candle right here. We sweep of it and we trade to this upside, knowing fully well that price must get to this strongest level of liquidity in the market. So give me that thumbs up and subscribe if you haven't already. Don't miss this. A trader that want to really trade with the trend can actually do it this way. This is our sweep right here. Wait for what? A market structure shift. This will now be our value structure high, which is a high that took out the whole liquidity in the market. And our fair value gap right here is our largest draw on liquidity in the market. And when price action returns back here becomes our next largest structural draw on liquidity in the market. So we have low probability of price seeking this value structure high in the market, except in a scenario like this where we come back to this TP and unable to break this TP, we moved up, which we caught live in the episode 2 of this series. You can check it out. So I used to tell my students that liquidity is like water in a river, that the flow of the water determines how the boat in that river will go, how far the boat can go. So as the highest level of liquidity determines if price will go to our desired direction. So we can use any of our CRT entries that I've taught you to sell to the downside. It wants to be candle entered our fair value gap right here. So this is the wants to be candle that entered our fair value gap from the daily time frame. We open right here and we close down here. All we do is we move to the 1 minute time frame. The 1 minute time frame open from here and pushed up. Once it's made a total sweep of our candle range high, this is our change instead of delivery. We can now sell to the downside and we target to this value structure low in the market. And before we can enter this trade, we can check to make sure that there is no larger structural draw on liquidity that will obstruct our trade. And we do that by zooming into the 4-hour time frame. Can you see we've not gotten to our 4-hour fair value gap right here? So this is our highest probability entry in the market. Here is the highest or the largest zone in the market pulling price to itself. So let me test your knowledge of this. Assuming we had a CRT here before we moved up right here, where will be our largest structural draw on liquidity in the market? Answer for me. This value structure high in the market. Price action will definitely move from here to our value structure high. You don't want to miss this. Let's combine everything to an intraday trading strategy. But before that, are you having problem with trading capital to trade with? Thank you Trading Funds for sponsoring this part of this video. Trading Funds is a pro firm company that offers trading funds or liquidity for you to trade with, starting from $5,000 up to $600,000 in scaling funding without you having to pay for any money. You actually pay when you pass the challenge. So they provide different challenge options for you to choose which one works best for you. Starting from their instant funding where you get funded immediately, to their first step, 2-step challenge where you are required to make a profit target of 6% to pass it, to their flex challenge, you pay after you pass. They will just collect a $9 caution fee for you. So Trading Funds allows news trading, holding trades for the weekend. They offer bi-weekly payouts of up to 90% profit splits, and they will refund you your money after passing the challenge. So I went to Trustpilot to see what people are saying about them. The review is excellent. So I decided to purchase their 25k account just to show you guys. So far it has been good. Their spread is very, very good compared to other pro firms out there. Click the link at this video's description to purchase one. Use my discount code SOULTRADER, a discount while purchasing. So for our intraday trading strategy, number 1 is get your value structural draw on liquidity from the 15 minutes time frame. Number 2 is look for any of our CRT models to form at our fair value gap. Number 3 is look for our CRT entries at our 1 minute time frame. Number 4 is zoom out to the 4-hour to make sure there is space to run before reaching our opposing draw on liquidity. Pay attention. This is our 15 minutes time frame. NAS 100. Price action just mitigated a 4-hour fair value gap right here and came and did a market structure shift right here, signifying the pulls have taken over. So number 1 is get your value structural draw on liquidity from 15 minutes time frame. So a takeout of this previous low will give us that, but rather we made another structure right here. break of market structure, previous low, previous high. Let's see whether it will give us that. This is our read. We anticipate a market structure shift right here, and we got it. So mark at our structural low on liquidity from 15 minutes time frame. This is our value structure low. This is our fair value gap. This is our value structure high, and we check that. Number 2 is look for any of our CRT models at our fair value gap. Okay, this is where anticipating comes in place. This is our one stupid candle right here. This is our candle range low. Can you see our second candle couldn't sweep it? Let's see whether third candle will sweep it. Can you see our third candle have closed but couldn't sweep it? Let's see whether fourth candle will. Can you see our 4-hour swept it immediately and tapped our fair value gap, but the candle haven't closed yet, so we check that. Next is look for our CRT interest at our 1 minute time frame. So I'll move to the 1 minute time frame right here. Can you see this is our sweep right here that mitigated our fair value gap from 15 minutes time frame. So I'll wait for a change instead of delivery for me to buy. I got it right here. I'll make my entry, my stop loss below these lows. This candle range high will be my partials, and my full take profit will be this value structure high in the market. I'll go ahead and check it. Number 4 is before we take this trade, we zoom out to the 4-hour time frame to make sure there is space to run before reaching any opposing structural draw on liquidity. Let's do that. So this is the 4-hour time frame. From the 4-hour time frame, this is where we are currently at. This is our value structure high in the market. Our only obstruction we have is this value structure high. So can you see we have enough space for price to run before reaching this value structure high. So we can head back to the 1 minute time frame to take our trades. 1 minute time frame. Let's see how the trade unfolds. Can you see partials hit? Let's see whether we'll hit a full take profit. And TP smash when it's to 7 reward ratio traders. Like and subscribe to support this movement of simplifying ICT for everyone. Check out my playlist ICT Trading Concepts, just created right here. I started teaching ICT from basics and now we are in intermediate. Follow up. Check out my other liquidity video, how I find trading opportunities using inducement and liquidity. See you guys here right now.